US on the brink of double bottom recession and dollar collapse, leading macroeconomic influences. Economists believe the pandemic has caused the US economy to go into a double dip recession and also exerts great pressure on the dollar. They are calling for financial support to address the difficult economic situation, arguing that the economy is heading towards a hole in savings more than ever before. Nouriel Roubini, an economist, shared an article about how the virus surge in the United States led to a double-dip recession and dollar collapse, according to economist Stephen Roach of Yale University. He also adds that the increase in coronavirus cases has spoiled Wall Street's hopes for a V-shaped economic recovery. Roubini also predicted in the CNBC's conversation with Trading Nation that the US will face more lockdowns in the coming days. However, he adds that these lockdowns may not be as severe as in the spring, but they could cause undeniable damage and plunge the global economy into recession. Therefore, Roach believes investors should be vigilant. Roach also predicts a temporary recession in the economy, mostly at the beginning of 2021. He also called a 1% drop in gross domestic product (GDP) in the first quarter of 2021, but said it could be more significant. He also warned of the ongoing and intense pressure on the dollar in need of financial relief to overcome the economic crisis. Jennifer Robson, an associate professor at Carleton University, Kroger College, Dr. Jennifer Robson, retweeted an article on government debt sustainability in Canada's post-COVID future. The article stated that the International Monetary Fund estimates the Canada's general government debt, including federal and state, will exceed 100% of its GDP. Economists worry whether the country can sustain its massive debt build-up that has not been seen since World War II. Additionally, experts explain that Canada's debt sustainability depends on the fiscal health of its provinces. The steady increase in the provincial debt, the economic shock caused by COVID, and the rising healthcare costs for the elderly put great pressure on the government debt. However, a worksheet analysis written by Dr. Trevor Tombe for the Canadian Tax Journal finds that the long-term effects, federal debt growth from COVID-19, are small compared to the significantly greater challenges facing state governments. Tombe, who gave his estimate of the ratio of debt to GDP for Canada before and after COVID, concluded that the large increase in federal debt related to COVID was behind with the increase in provincial debt. Additionally, federal finance remained sustainable despite the virus-induced economic shock. Brian Riddle, an economist and senior researcher at the Manhattan Institute, tweeted again how COVID aid compares to the Great Recession alert. He tweeted that around 70% felt that the government provided less incentives during the Great Recession, and that the response to the 2008 recession was much smaller. However, adding it all, the Great Recession saw as much backlash as it did during COVID-19. According to the Federal Budget Committee in charge calculations, the total of COVID-19 aid reached about $2.5 trillion for the next 5 years, a rate equally attributed to the Great Recession between 2008 and 2012. However, the last analysis, the Great Recession funds were mostly distributed for 5 years, but COVID aid was only spent over 6 months. CRFB data also revealed that the Great Recession cost the federal government 2.4% of GDP compared to COVID-19, which cost 2.3% of GDP. In addition, The economic recovery measures will also cost the US government 12% of GDP in fiscal year 2020, compared to 1% in 2008 and 4% in 2009. Citibank, according to Citibank, widespread vaccine distribution and ongoing monetary expansion to combat the coronavirus pandemic could weaken the US dollar by up to 20% next year. When viable, widely distributed vaccines hit the market, we believe that this will catalyze the next leg lowering in the structural USD downtrend we expect, the US Bank said in a research note. Given this setup, there is the potential for the dollar's losses to be front-loaded, with the USD potentially falling by as much as 20% in 2021, it added. Citi also attributed the dollar's potential collapse to bets that the US Central Bank will continue to use all its tools to support the US economy next year. The Federal Reserve said it will keep rates low even if inflation expectations rise, potentially leading to a steepening of the US yield curve. This is important for FX, as when investors begin to rotate into value, they will increasingly rotate out of the United States, given valuations on both the SPX, Standard & Poor 500 index, and USD are rich, versus the rest of the world, Citi said. Also, economist Stephen Roach warns that the wave of the virus has led to a double-bottom recession and a crash of the dollar. The USA may be at the high of a double-bottom recession. Economist Stephen Roach believes that rising coronavirus cases are disrupting Wall Street hopes of a V-shaped recovery. With the rate of infection rising now, a still vulnerable US economy is likely to experience more lockdowns, a senior researcher at Yale University told CNBC's Trading Nation on Monday. Although Roach believes the isolations will not be as severe as last spring, the damage will be undeniable, he warns. This will likely lead to a temporary recession in the economy in the first quarter, said Roach, who served as president of Morgan Stanley Asia during the deadly 2003 SARS outbreak. We have had these relapses in 8 of the last 11 business cycle spikes, and I don't think this is an exception to this rule. Roach's economic forecast is similar to the outlook for JP Morgan Chase, which calls for a reduction in GDP to 1% in the first quarter of 2021 before continuing to expand. However, he suggests the drop may be more significant. It's hard to predict a loud figure like quarterly GDP, Roach said, but I don't think a single-digit drop would not be surprising for me. It plays even more dramatically. The fallout also contributes to a massive dollar drop, according to Roach. He has been warning the street since last spring. A collision is almost inevitable. When I first came up with a seemingly unconsensual, crazy view, I was concerned about the possibility of a current account deficit caused by large budget deficits related to COVID, he said. It comes out in a more dramatic way than I thought when I wrote about it. The dollar money index has dropped 10.5% since 20 March. It fell 4.5% for the year. This is just the early stages, Roach said. The pressure on the dollar will likely be even more intense. We need financial assistance to solve this really difficult economic situation. Its base condition requires a 35% drop against other major currencies between today and the end of 2021. We are going to go into the hole in our savings more than ever before in history, Roach said. Most of the idea, comment, information, and criticism containing in these videos have been created by Daily News Report. Before making any important investment decision, use the information contained in these videos as a starting point for conducting your own research. If you make any investment or legal decision, it is advised to consult an expert before making this decision.